Hello and welcome to Doing Business in Rwanda with me, Arnold Segoa. In this edition, we will be tackling all issues financial inclusion as we look at key policy makers, lawmakers, and all captains of industry who are converging in Kigali, Rwanda at the MasterCard Symposium for Financial Inclusion. Don't forget you can be a part of the show. Our Twitter handle is at CNBC Africa, or even join the conversation at DBI Rwanda. I'm Arnold Segoa and welcome to Doing Business in Rwanda. Two-thirds of the adults in Africa do not have an account at a formal financial institution, and the Symposium 2016 sought to offer insights into sustainable business models to drive financial inclusion. Getting into the symposium, numerous participants were already doing much to foster financial inclusion on the continent.
Yeah, so the Omidyar Network we are an impact investing firm. We believe that talent is much more equally distributed than opportunity, and we are working to help create more opportunities for people to capture their potential, if you will. And one area where that has to happen is what I would call economic empowerment. So we work on issues such as property rights and access to financial services.
We at UNCDF believe that digital finance offer a great opportunity to accelerate financial inclusion. And in the markets where we are, we work with the different stakeholders, governments, service providers, regulators, and other donors to build the digital financial services ecosystem needed to accelerate financial inclusion.
Well, so CGAP is an organization that's housed in the World Bank. We're a coalition of 34 member donors, and our entire mission is around financial inclusion. So we do a lot of research and work with partners in the field to try to increase financial inclusion, either through using new techniques, digital means, making sure that consumers are protected as part of receiving financial services, so a whole range of different kinds of topics.
Over the years, financial inclusion in Africa has binged with the penetration of the mobile phone. This has widened the scope beyond inclusiveness to analytics.
So I think one of the really interesting things about the last, I would say 10 to 15 years is there's been an enormous expansion of financial services that cater to poor people who were not before that in the financial system. So we've really tackled the issue of access to a pretty large extent, and especially with the growth of mobile money and with other kinds of things that leverage phones and technology, we're expanding access even further. But the real issue then arises of how people actually use these products, whether they use them, how often they use them, whether they get everything out of them that they can. And that's where we're seeing that not enough is necessarily happening. So you have a lot of problems with things not actually being taken up and not being used consistently.
With the growth of data and fintech, Africa hasn't been left behind. Tailor-making fintech to suit the African setting, though, will prove to be a challenge.
I think the key thing that we have to admit to ourselves as the financial services industry is that we've imported a lot of the ways that we provide financial services from other markets where their data environment looks very different. If we look at the US and Europe, asset registry, the way people derive their income from formal employment, all of these are very different types of activities, very different types of asset bases, which lend themselves to very different type of way of understanding whether or not those individuals need or can engage in some type of financial services. So what alternative data allows us to do, and analytics around it, is create credit scoring models which fit better for the context in which we're in. Our asset classes are not the same. Like our homes often don't have title deeds. Our assets, whether or not they're cattle or a vehicle, are not registered with some central asset registry. So we need need to change the way that we assess people's ability, willingness to repay loans. We need to reassess how we validate identity. A lot of the markets in which we work in, the governments haven't been able to create a central identification system. How do we create or use other data, not only biometric, but maybe social media data or other ways of developing identity so that we can know who we're dealing with and how they will engage with financial.
A success story in Rwanda's financial inclusion is access to finance. This institution has catalyzed the inclusion to 80% of the country's population.
Access Finance Rwanda has contributed in a number of ways, and that was mainly at the macro level, that is policy and regulations, at the meso level, capacity building, and at the micro level, getting clients to have access to financial services. Notably, at the macro level, it's really policies around and research around the FinScope survey, the financial education strategy, the development of SACCOs in Rwanda, which is a very big program for the government of Rwanda to increase access to financial services in the rural areas. But we have also had several projects at the micro level that has tried to demonstrate that access and usage of financial services is a need and it's possible for the low-income people in Rwanda.
I think what Rwanda has really worked on how to bring in, through savings, the unbanked population into the financial services sector. So I think that's been a very important focus through the Umurenges here in Rwanda. I think some of the challenges, though, that need to be addressed around the Umurenges, and I know that this is being worked on, is how do we strengthen, how can they be strengthened, how can those institutions be stronger in terms of delivering services to their clients. I think what we'd like to see is probably more diversity of actors in the financial inclusion landscape, and we're seeing the growth of banks and other actors over time. So I think some of the policies promoted, the enabling environment that exists here in Rwanda has helped support a better environment for financial inclusion. And that's why we're seeing the progress that's been made here.
So before we include the population in the financial space, shouldn't one emphasize financial literacy?
So I think there's a lot of room still to innovate on financial literacy. I do think it's important. But I think the way we think about it and educate clients about financial services and products can probably be done in a way that is closer to the products and services they need, and is delivered in a way that will be a lot more effective for them.
Back at the symposium, we catch up with the central bank governor and ask him about the challenges as the government moves towards universal inclusion.
Yeah, I think one is really the kind of products accessible to these people, even those that have accessed it. And then while we talk of the SACCOs really shortening the distance between the financial institutions and the population, their capacity is also to handle or to generate products, develop products, and be able to bring many people on board is a bit limited. So now banks have started moving really down to the rural areas. With technology, we no longer need brick and mortar bank branches. Today we have what we call banking agents. Any small boutique, any small bar can become a bank at the same time. So using a telephone now, populations are able to open up a bank account, deposit and withdraw money from a boutique, from any trading unit within their localities. We think this is really going to help improve or help us cover this 11% remaining. But the issue of education remains a big challenge. Education and trust from the population to these financial institutions. And we as the central bank have had really to take a lead in being present with the population, overseeing what these financial institutions are doing, but also working with the different stakeholders to educate the population about the benefits of working with financial institutions. So the biggest challenge that remains is really about education, financial literacy, but also the kind of products these financial institutions are able to provide to the population, because they remain expensive as well. So the cost of the products and products that address the needs of this part of our poor population.
How about legislation? There's a reason the Dodd-Frank Wall Street Reform and Consumer Protection Act was passed. Consumers need protection. Shouldn't this be pushed from the get-go?
So access to financial services and consumer protection go hand in hand. Obviously, the more financial services people have, the more they need to understand those services and the potential risks around those services. So CGAP's been very actively working not only with governments to think about how they can incorporate consumer protection into what they do in a way that still allows the market to work, but we also work with providers in ways that help them protect their customers, because if their customers fail, the financial services provider fails, correct? So there are ways that we've been looking at where a provider of a digital financial service can just provide a quick disclaimer, a quick messaging to that provider, helping explain, okay, this is what this service is about, these are some of the consequences. This is only just beginning, and we need to make sure that people who are taking very high interest, quick turnaround loans understand what the implications of that are when they take those loans, for example. And so there are ways you can work with both governments and providers to incorporate consumer protection in the work that we do.
Interest rate caps are gaining popularity in the region, and one can wonder if caps won't deter financial inclusion in the region.
Yeah, we're very concerned about that. So interest rate caps look good on the surface, but it is really expensive to provide financial services to the poor. And so one of the unintended side effects of ill-constructed interest rate caps can be that people don't have access to formal financial services. So they're in fact chased into the gray economy, where they may actually get even worse terms and conditions. So I think governments, as they think about interest rate caps, if they think about interest rate caps, need to do it very, very carefully, because there are unintended consequences sometimes of introducing those things. So we're seeing it happening in a number of countries right now, and we're keeping an eye on the situation and trying to work with governments to think about how they protect customers, but make sure that customers have access to financial services that they need.
It is important to note that the MasterCard Foundation is in over 30 countries in sub-Saharan Africa. Among these countries, Rwanda, with financial inclusion at over 80%, still stands out. I'm afraid that's where we leave it for this edition of Doing Business in Rwanda. Arnold Segawa is my name. You can be a part of the conversation. Just send us an email, that is dbir@abn360.com, or follow us on Twitter. Our Twitter handle is @DBI Rwanda. That's where we leave it for this edition of Doing Business in Rwanda. Have a good afternoon.